G'day guys, Sam here from Trade to Prosper, giving you another chart technical review, and this time I'm going to focus on ADA, and obviously Bitcoin needs to come into the picture, and I'll look at the general markets as well, just to see how it's all aligned. But it is a complicated process, and you might get some benefit from it. It's pretty much like a workshop for me, just thinking out aloud. And hopefully you get something out of it as well. It's been a while since I did my last chart review, so I thought I'd better just do some, keep people up to date. And it's a tough market. It is definitely a tough market to trade. And what I have now in front of me is Cardano on the Kraken exchange. I think it's the oldest. I don't know if there's older charts to it. When I looked at Cardano from CoinGecko, you can see it's got a history way back here in 2018. And what I have here is, let's see, if we look at January 2018 sort of thing, what I have here is 2017, which doesn't make sense, does it? January 2000, yeah, so, okay. It doesn't quite line up, but if I was to get rid of the log, I suppose that will do it. So I think this is the chart that we can work with, the Kraken. The others are pretty much later in the picture. Can this early start give us a help? Probably not, just the bottom. So let's put on the log chart and let's start looking at it. Okay, so what I've done is, what I'll do is I'll just hide a few things just from this perspective for a sec. Okay, so what I did is a pretty much basic approach, which is the fib fan, which gives us Fibonacci levels from a diagonal perspective, I suppose. And there's a method to that. And I use the bottom and I saw confluence along the line. So we can see this fib fan working pretty well. And we've got, it's probably aligned with Fibonacci as well from a horizontal level perspective. And good evening to you, Inspector Cruz. So what we looking at is confluence with support and resistance and how to trade it. Now, this weekly chart shows you that from a candlestick perspective, it's pretty crap. We had a bit of a rally and fizzled out. It is really fizzling out. This pink one is the 200 4-hour moving average, which I like to use, and you can see how that's come into place as well for the weekly. So that's bearish in its until we break that. Really, there's no point of even looking to be bullish. But we see how the weeks just closed bearish, two wicks on the top, and it's not looking good for ADA at all. And makes sense. And you'll I suppose get the summary towards the end as to why this is not a good level. And anyway, so that's one perspective. Now we add our levels. So what I did was I'll look at the monthly chart as well. And I just mapped out my levels on the monthly. And you can see those monthly levels. That's a yearly level, monthly level. And they might come in to the picture later on. So we already had the Fibonacci, and it's also a monthly level from this perspective as well. What's a key thing is this level here. Hold on just a sec. I'll make it thicker. This is the main level that we lost. So that once we lost that yearly and monthly level, you can see that that's going to be our resistance. It was, if you could play for a bit, and you can see that was probably with those wicks, you can see that played into place, and it got rejection from a monthly perspective, and now downward pressure. So that's from a candlestick perspective. I do see this level with some strength. There's some levels on the way down, and let's just highlight these strongly. And obviously the next one down is right down here. So let me just push that across. And the final one down is really no-brainer. That is a very strong position, all right? I'm not saying it's going down there. I'm just putting it into the chart. And we've also got one position here as well. There's a lot of confluence here with volume, point of control. And I should make them monthly. So that's a monthly level as well. So you can see the candlesticks approach is just measuring our levels, and then we look at Fibonacci, and then we get a perspective of how the confluence is there. So let's go back to the weekly, and we've got that all mapped out. Now I'm going to get rid of those just for the time being. And I'll just need to put those in that bucket as well. If we do our Fibonacci, top to bottom, you can also see the 0.382, and if I was to flip it the other way, it will be the 618, but the 0.382 is acting as support along with this Fib fan. And if we put on our levels, we don't have any actually strong candlesticks that will support that. So it's just Fibonacci at the moment that's really doing the job. And we can say that historically, this level here, we had resistance and support. And if we were to move that across to the right, so this level here is going to be acting as resistance as well. So you can probably say that's why we've got a bit of resistance. So we drop below it, and therefore it's acting as a resistance. So we can't really be bullish until we break that, right? And then we've got this neckline, this macro neckline. So what we have, we've got a few things that are really against us to the upside. what we have here at the top is a lot of history for support, and we did dip down. I'm surprised that we even came back above it. And then the 200 moving average, and I suppose some Fibonacci levels that acted as resistance. Now, this is really a distribution structure. And we've broken that neckline. I see that neckline as important based on the confluences here. So that is the neckline, and that is distribution. No matter how you look at it, it's an ugly way. I didn't see that formation taking place, so I'll keep that in mind in the future. But it is definitely a distribution, and we've broken if you look at the Wyckoff structure, this is our shakeout area, trying to get back up, and we failed. So that's the confirmation. Now we have all these levels below it, and what we can only use is pretty much history. Historically, this is, you can see how that wick came down. This is strong, I suppose, support, resistance, and again on the way up. And it's not especially in this phase of the market, there is not much strength here. Historically, there is strength, but that's history. We're looking at recent history, and recent history tells us there's not much here to hold this up for a reversal. Doesn't make sense. It can bounce, but I still see further downs. I don't think it will even bounce that much the way it's going. We haven't got much volume, and let's just check that volume on, see if we've got it here. Yeah, so you can see volume is just miserable. If you look at, no, we don't have history enough to do that. In the COVID scenario, even the COVID scenario had more volume. That was capitulation, and we had greens along the way. This week, so we got a few actually. That one, okay. So we on the, so it's a bit early to say, but we've got a few days. I actually saw the rest of the week. So I suppose that's not bad, but compared to that, yeah, it's not bad when you think about it from a volume perspective. Compared to the COVID scenario, it's pretty high. But the candlesticks tell us a different story compared to these candlesticks. That's the difference. So even though we've got volume, and the volume is really based on Kraken, so it's not really going to help us. We need to look at another chart to see what the volume does. So let's have a look at the bigger exchanges and see what the volume says. So let's just save this for a sec. I'm going to just jump onto Binance and maybe Coinbase, but let's see. Tether will probably have the most volume. And okay, so now we could see the volume. If we use Tether's volume, it is nowhere near, because Kraken is not really a big exchange. So here you can see the volume of the COVID period if that was a bottom, and you can see a lot of volume compared to this crap. Not yet anyway. So what we'd have is volume just descending, a bit of a height in dropping price, as you understand. So the volume, there is volume divergence a bit, I would say. Just going across. So that is our green candle, and look at the weekly on that. Let's go zoom in. Undecided candle. So we've got 2 weeks of indecision. Even though this one's very bearish for this indecision one, and this is neutral for this green candle as well. So it's ugly, isn't it? From a volume perspective and the candlestick perspective. So let's go back to our original chart. or the quick coin, where is it? There we go. I believe we're on KuCoin, right? No, we're not. I thought it was on KuCoin. Let's just reverse this and I'll get back to my. Sorry guys, I forgot which chart I was looking at. Which chart? Oh, it was cracking. Oh, okay. I thought I was making it up. All right. So we've got that covered. So right now, looking at that, the 0.382 is holding it. So what will happen if we lose that? I'll look to the next major fib level. So if this was to go sideways and then drop, I suppose that can help. But I do see this level more of an interest. Actually, just look at this. This should be a strong level. We should still get a good bounce, maybe to there. So maybe some liquidity is coming into the place. Keep that in mind. I still see this potentially coming down and then bouncing up. We still haven't finished the accumulation phase, but it looks weak. Now, if we look at from another perspective, macro chart, we saw this broadening funnel, and the breakdown is from that level. From a macro picture, real big macro picture, this Fibonacci level, the 618, the monthly levels, this is our very strong support level along with this macro trend line. So if was it to drop, the 0.5 is going to be very strong, could be a strong level of support, and we've got to see, it could probably just continue on. So that is one level that I'll be buying in. I'm still holding back. I do believe this is some sort of bear flag, just very similar to Bitcoin, and then come down. This level will be interesting to me, and then if it drops further down, I'll be going in a lot there. So ultimately, why I say that? Because of this structure, it started from here, and the cycle should finish here or nearabouts. So we've got a few levels. That's the first level, second level, and third level, based on this structure and where everything started from. So the bull run started from here. If it completes its cycle all the way, which I doubt it, I think this is a good spot to buy, average in, and that will be more volume. So my strategy is volume 1, buy there, volume 2 of my portfolio will come in there. You're not going to be able to find the bottom, but this comes into my strategy. If we were to look at align with Bitcoin right now and what ADA does right now, let's see what's coming in play. So let's look on the daily. So I did buy in, but I'm hesitant to buy any more. At the moment, we do look like we have support. So if this turns out to be a bearish, then definitely that's when you sort of get out. So this is our level of support, 44, pretty much 44.5 cents. I'm hoping that this will just do another move, and you can see potentially very similar to Bitcoin, we're in a range, and this does look like a bear flag of some sort. And so if we were to say that is our A, that's our B, that's our C, this is our D, E is anywhere around here. So I do see it coming up and then dropping. and that's where I'm interested in this level here. I'll see how it goes, but that makes sense to me. This does look like a bear flag. Very similar, not similar to that. It's taking on some formation, but yeah, you can see that. So let me just clean that up and get the channel. Just line in the sand, and let's see how we go with that. It could easily just drop depending on what Bitcoin does. What I'm looking at Bitcoin, just lining up with Bitcoin at the moment. Bitcoin is, people say I was inverted head and shoulders. It's not anymore. So they were talking about, a lot of people were talking about this being the inverted head and shoulders, and it was possible, but the thing is, it doesn't really fit the convention. So what I've done here, I've got two scenarios that are bullish. Let's just take them out. So one scenario is that we do find support here, and then we get the butterfly bearish harmonic. One of them meets this target, which is pretty much a double top of thing. You can see that. And the second target is up here, which makes sense as well. It's where we found resistance. So this harmonic is playing out at the moment. And if you see a green bullish candle or a reversal, a cup formation, if you see something like that, understand that this is what we're going to look for in the target. So that's one scenario that I'm looking at. The second scenario, which is a bit more bearish, but has more of a target range, is this here. Is the Gantley formation, and that has a double bottom scenario. So we have a double bottom. Maybe I'll just change it to white. The double bottom, and if it was, so you see this wedge formation. So the wedge formation could come down here. I do see potentially that is an area of interest if this was to break. So if we kept coming down, I do see a reversal, double bottom type of thing, and this is pretty much the maximum target if that was the case, and then we'll reassess based on how it works out. So looking at Bitcoin from that perspective, we do have some time in this area to trade. Again, similar, depending on what takes place. If we do the default, let's just do the color. Yep. That could be a range of some sort. The other one, if I was to just get rid of this for a sec. If I was to put this back in there, I will just put that channel, and we probably can go higher. We'll see how that goes. Do I think it's a reversal for Bitcoin? No, I don't. I do see a good bounce. It's just taking its time. It's got to be patient, but there is definitely, from a big picture perspective, I am yet to be convinced that this is the bottom. And we can talk about that next. Okay, so what are the other markets doing? Okay, let's look at the NASDAQ. We need to look at the broader markets to pretty much understand where Bitcoin lies. So we know that the Fed has done quantitative easing and printed heaps of cash, which pretty much did the bubble to the stock market. So back down here in 2020, we had the COVID crash, and that was in line with Bitcoin and so on, and that's a 30% drop. And then we had this rally with mass printing and basically cheap loans. And once the interest rates start going up, they're selling the stock, and because they don't want to pay too much interest along those lines. We have this structure. We have it in two phases. This is one. Oops, I need to change the color. We have this structure, and it started from this point, or you can argue this point, and we have this broadening wedge, and basically we fulfill that return, and we also fulfill this turn. The other one is this. So if the bull market if we measure from this perspective up, it's also returned here. So I do see a reversal of some sort coming here. I don't think it's going to be a big one. What we have is our phases. We had our A, B, C, and we should at least actually we have done it there, haven't we? We might do a reversal structure here of some sort. However, it's not looking good at the moment. So if we look at what the NASDAQ and SP 500 is no different. If we look at it from this perspective, a trend line, so we've got this trend line, we want to see it break it. We're getting the resistance on this Fibonacci level, or that level here, 786. We've got the 1 point, so we've got a number of ways of looking at this chart. We've got the fib extension pretty much. So if I was to do this, we'll see where it's coming from. We'll use that as a reference as 1 to the top and the extension to the bottom. So it's working out. Found the 1.272, which is not a big support. And we've got this here at the moment as a resistance. If it breaks that, and what we want to see is we want to see a break above it, probably find resistance here. This will look nice to the upside, and then we'll have some bearish stuff here. Will Bitcoin follow that suit? I don't know. At the moment, this could break through. We just need to see this level break out. That's why the indecision's in the market. I think that's pretty much why Bitcoin is not really doing much, because the NASDAQ's not doing much as well. So that's pretty much what I have from ADA's perspective. I can continue on with others. I just want to align ADA with Bitcoin. So as long as Bitcoin goes sideways, undecided, and the alts have pretty much done a good rally, but you can see how there is some bearish formation. I do believe that the alts will come back down again. So the last part I'll look at is dominance. Let's see what the chart says about Bitcoin dominance. Okay, so Bitcoin dominance is still coming down, but this is the box where I see volatility. You might find support here. As you can see, it's a box that I align with others that could be a reversal or continuation down. So the alts, so this is a week 3-day chart from an indicator perspective. The RSI is starting to turn a bit, and so is this. However, I don't see any reversal anytime soon. So the alts are still, and you can see this line here as well,